Hello and welcome everyone from the headquarters of Qatar Fintech Hub in Doha. We kicked off our webinar series back in June with the first episode on InsurTech. Can everyone go on mute? I can hear some echo. Brilliant. Today we bring to you our second exciting webinar, which is on the topic of WealthTech. We would like to formally kick off the webinar and have a welcome note from Abdulaziz bin Nasser Al Khalifa, who is the CEO of QDB and the chairman of the Fintech Hub Task Force.
Thank you, Hassan. I hope everyone can hear me loud and clear. Good afternoon, everyone, and welcome to the latest edition of the webinar series that we launched back in June. Last time we met, our focus was on InsurTech, where we discussed the latest industry trends and how the sector is shaping up in the region and more specifically in Qatar. Today, our focus shifts to WealthTech and how it's generating momentum not only globally, but in the region as well. I'm excited to be here with you today to shed light on this domain and further understand how it's rapidly changing the financial sector. Most importantly, we'll also review and discuss the opportunities it creates for Qatar and the region. Since its emergence as an independent financial industry, WealthTech has steadily continued growing worldwide. In recent years, almost every major banking or financial institution has made strategic investment and partnership in WealthTech startups. The significance of investment and partnership forged in WealthTech, however, cannot conceal the reality that the industry still faces many challenges. Wealth management is still a conservative and slow-moving industry. A modernized view is still required to enable transformative digitalization and to edge it closer to the expectation of the modern clients. Wealth products also need to become more transparent and modular to increase customer adoption rates. On another level, more awareness efforts are required around the financial literacy and investment approaches in general. This is a traditional omnipresent challenge both startups and traditional investment management firms face. Through Qatar Fintech Hub, one of QDB's incubators, and with the support of local and global partners, our aspiration is to collaborate with key players in the investment and wealth management industry to lay down the infrastructure and groundwork required to boost WealthTech in Qatar and beyond. I would like to thank you all once again for joining us today, and I wish everyone a successful and an insightful webinar. Thank you.
Thank you, Mr. Abdulaziz. And we will be exploring a number of issues and challenges raised by Abdulaziz in this sector as part of the panel later on. We are bringing this webinar today in partnership with Qatar Financial Center and with InvestSuite, who is one of our fintechs who participated in our second wave. With that, I will go through some housekeeping rules before I hand over to Hamad. First, as you all know, we will be recording this webinar because in addition to people who are watching it live, we do share it with over 1,000 plus of our partners who wish to watch it later at their own leisure. We will be taking questions and answers as we proceed. We will try to answer them towards the end of the webinar, but if we are not able to, then we will definitely get those answered later on. Now, I would like to invite Hamad Al-Khatani, who is a manager of the Incubation and Acceleration Department at QTB, for his welcome note as well.
Thank you, Hassan. Esteemed fintechs and partners, a special welcome to all our guests, fintech entrepreneurs and speakers. We are delighted to have you with us today. Qatar Development Bank, the co-founder of Qatar Fintech Hub, proudly strives to provide entrepreneurs and startups with holistic advisory support throughout all phases of their business. This is in line with our vision to develop and empower entrepreneurs and inventors to contribute to the development of the private sector. Qatar Fintech Hub is a global fintech hub with the purpose of supporting the development of the fintech industry in Qatar. It aims to facilitate collaboration among the participants and stakeholders of the fintech ecosystem and develop local and global relationships that will advance the bank's fintech vision. We offer a globally interconnected cluster, which gathers a vibrant community of fintech entrepreneurs, industry experts, regulators, and investors to offer the best global opportunities, expertise, and develop collaborative fintech ecosystem. Qatar Fintech Hub have tied up with global fintech hubs, financial institutions, universities, technology partners, industry experts, and others. Today, we are hosting one of the first WealthTech webinars in Qatar to hear from one of the veterans in the industry about the latest trends and how they are shaping the future of wealth management industry. We will also be hearing from our esteemed panelists about how the wealth tech industry is evolving in the region and the challenges it presents. On behalf of QDB and Qatar Fintech Hub, I would like to welcome you all again and express my confidence in your ability to reshape the future of this dynamic industry. We expect you all to continue working hard to achieve your milestones and continue to excel the horizon of the fintech ecosystem. Thank you and good luck.
Thank you so much, Hamad. Now I would like to invite Jonathan Gain from InvestSuite to provide a bit of background in terms of what is WealthTech and some of the latest trends.
Thank you very much, everyone. And thank you to our esteemed peers. And it's wonderful to be here amongst such a prestigious company today. So I'm going to talk a little bit about the trends we're seeing in wealth tech. And as one of the leading wealth tech providers in the region, we're very fortunate to witness demands and challenges that financial institutions and the clients alike are facing. So I'm going to walk through some trends and tell you a little bit about what we're seeing. But let's start with what is wealth tech and just sort of set the scene a little bit, if I may. So wealth tech is a subset of fintech. It covers any element of technology around managing wealth for end customers. It encompasses things such as robo advice, digital self-execution or online brokerage, robo retirement, portfolio management, and even things such as embedded wealth, where the actual wealth journey is embedded in an everyday journey, such as a grocery store or a Walmart, for example. So wealth management is this wealth tech is this subset of fintech. It covers all of these different elements. So when we look at who wants what, we kind of look at it from the financial institution perspective, and we also look at it from the end client perspective. So from the perspective of the banks, what do they want? What do you want? You want to be able to own or have an ownable, innovative wealth and investment solution, white label, branded with your brand, delivering outstanding experiences. You want it to be integrated and connected in your existing tech stack, and you want it integrated into your current mobile offering or web offering. And really, you don't want to have to choose between something that's good, fast, or cheap. You just want the best solution that delivers wealth management solutions digitally in a cost-effective way with a quick time to market. What do your clients want? Well, they're looking for smart, easy to use digital solutions, typically mobile first, but also web. They want to make better investment decisions using these tools. And actually, for some people, they want to start on their wealth creation journey. They want cost efficiency, and they want it to be transparent as well. And really, really importantly, they want it to be personalized. Hyper-personalization, as we'll see as we go through the presentation, is very important and increasingly important. And they want it to be in line with their values. So we'll see that as we walk through this presentation. So let me start with an overarching statement. And like I say, we're very fortunate in InvestSuite to be able to witness this on a day-to-day basis. We are in the middle of a digital revolution, and financial services firms must adapt and are adapting. We look at it through these three lenses. These are the three major trends that we see. We see it as what we call the wealth crossroads. And that wealth crossroads is both a threat and an opportunity. What we see is there's a demographic earthquake taking place. There's a perfect storm that's happening in financial services. And actually, in the third lens is trying to keep up with what we call the technological Big Bang. So let's decompose those down and have a look at each in turn. So the first one is the demographic earthquake. So we're in the middle of the largest intergenerational wealth transfer the world has ever seen. We're talking about between 40 and $60 trillion moving from one generation to the next over the next decade. We see that millennials are now 50% of the workforce around the world. They are digitally native and they have new expectations on how their money is invested and how they access that experience of investing. We've seen the impact of the pandemic driving more remote working, more remote interaction, less face-to-face interaction, and we see that continuing to a certain extent. Finally, we see hyper-personalization. It really is the new battleground in financial services. And what the end client now expects is an experience from their financial services firm, from their bank, similar to the experience they get from Netflix or Spotify or Amazon. So addressing your customers in a personalized way with solutions and products that are specific to them is increasingly the most important thing you can do as a financial services firm. And talking of things that are increasingly important, ESG investing. What we see more and more now is with the demographic shift is people are as interested in what the impact of their investments is, as well as the actual return on their investments. So ESG is becoming increasingly important. The second big trend we see, if we decompose it down, is what we call the perfect storm in the financial industry. So what we see is increased regulation. At InvestSuite, we think regulation is a good thing. It protects end customers, but equally, there's no doubt that it creates a lot of pressure on margins and pressure on being able to deliver wealth management solutions in a cost-effective way through traditional channels. Secondly, we see $30 trillion approximately sitting in cash savings around the world. How do we activate those cash savings and move them into investment assets, democratizing wealth management for all, and also achieving a higher return for the end customer over cash, and also a higher return for the banks and financial services firms themselves in higher margin investment products. Thirdly, we see fintech competition popping up from all sides. Some of it's competing with the banks, some of it is complementary to the banks like InvestSuite, but there's no doubt that's creating pressure, and the fintechs that are competing are obviously digitally native. And finally, in this trend, what we see is digitalization. So doing it yourself internally can be costly and time consuming. And by the time a proposition is built and delivered, if you build it inside, sometimes the market has already moved on. The third lens we see is actually the technological Big Bang, we call it at InvestSuite. So technology itself is obviously very rapidly changing. We see what we call the digitalization of the core business model. So for a great example of that is the new core banking systems that are now available, modular technologies. We see the cloud becoming ubiquitous, and in the region we see regulators increasingly willing to accept cloud deployments. What does that mean? It means you can offer near infinite scalability of a solution at a fraction of the cost of doing it on premise. And that's actually something we leverage at InvestSuite ourselves. Also, we see huge increases in computational power and speed. And when you couple that with AI and machine learning techniques that have taken a huge leap forward as well in recent years, what that means is you can deliver genuine hyper-personalization to your customers. And hyper-personalization can cover a lot of different things. It can be individual, thematic, personalized portfolios, literally an individual portfolio per customer, per objective that they're investing towards. all the way through to leveraging the customer data and driving what we call next best actions. So how do you nudge your customers in a particular path with personalization of offer and solutions? So our mission at InvestSuite, quickly, is to help financial institutions in the region on the digital wealth transformation journey. The Middle East is strategically very important for us. We're obviously proud members of the esteemed Qatar Fintech Hub. We've launched our mobile solutions already with a well-known bank in Dubai and are actually deploying several others in the region currently. We work very closely with the global management consultants like EY, PwC, Deloitte, and so forth. We partner with core banking providers. I mentioned that earlier, how important that core banking element is. We actually are very fortunate and proud to have a corporate venture capital investor from the region that is invested in our business. And of course, we provide Sharia compliant versions of our solutions. What those solutions are, just to give you a little bit of an outline, we have all B2B white label solutions, so you can have your own version, your own delivery of this. We have a Robo Advisor that delivers those hyper-personalized portfolios, so that allows you to have your own betterment, for example, from the US, allows you to deliver robo advice to your customers in a white label format. We have our own self-execution technology, so that allows you to have your own Robinhood, for example, and allow your clients to buy and sell their favorite stocks, ETFs, mutual funds, and so forth. We have an optimization technology that powers our hyper-personalization. And finally, we have our Storyteller product, where we are revolutionizing portfolio performance. I talked about hyper-personalization. How do you engage your customers with reporting? We do it in this personalized way, and we can now even offer that in a video format, a personalized video per customer. So very, very powerful way to engage and drive the next action from your customers. Just a quick note on the Commercial Bank of Dubai, CBD. We launched the investor product with them a few months ago. So that is a robo advisor, the first bank-owned robo advisor in the Middle East. We're also adding the self-investing product in a few weeks' time. But the key point here is we delivered this with the Commercial Bank of Dubai in months and at a fraction of the cost compared to if they had built it themselves. So finally, I've come to the end of my presentation. As you get to know InvestSuite, you'll see that we believe we are the Pixar of wealth management. That means we have our mind-blowing technology that we can help you with, but we couple that with amazing creativity and really designing human-centric UI, UX, and customer journeys so you can deliver the best value proposition to your end customers around digital wealth management. So thank you very much for your time. Thank you again to the Qatar Fintech Hub for the invite, and I wish you a great rest of your webinar.
Great. Thank you so much, Jonathan, for that overview. I think it sets a very good context for people who are listening or hearing about WealthTech for the first time, or if they want to learn. And that's the exact purpose of these webinars. Now we will get to our exciting panel, which will be moderated by Henk, who is the Chief of Financial Sector at QFC. Today in the panel, we have with us Felix, who is the co-founder of True Wealth, Andrea, who is the CEO of a global millennial capital, Ajay Kumar, who is an AGM at QNB, Somil, who is the founder of Project Brains, and Deepan, who is representing Chameleon. He's a BD, business development lead, and Chameleon. So Henk, I will hand over to you for the next sort of half an hour to run the panel. And as I mentioned, please do share Q&A with us. We will try to get the answers from the panelists. If not, then we will get back to you separately on that.
Thank you, Hassan. It's a great honor to lead this panel with, I would say, thought leaders, technology people, bankers, people who look at the future and try to do things better for the world. Because we've just seen in Jonathan's presentation that moving wealth from one generation to another generation is a big topic, and technology can help. It's also interesting to see that Jonathan started off by explaining what wealth management is, and then at the end, pushes his company, which of course I think is a good way of doing it. But I think what I would like to do with all you guys today is to try to get an answer on what WealthTech can bring. Is it a disruptive technique? Will it replace the banks? Will you partner with banks as Jonathan did? Is it an extra market? What can we expect? So hopefully with that in mind, we can get some of the answers. And maybe Felix, it's good to start with you. By the way, I don't see you on my screen, but you must be there. So you are basically covering both traditional customers as well as financial institutions. Can you, from your perspective, explain what is the different type of customer for a wealth company and a wealth tech company? I hope you're still there.
Yes, I'm still there. Do you hear me?
Yeah, I can hear you, but I can't see you.
You can't see me? Well,
but go ahead.
Yeah, it should work. But let me just explain. Well, thank you very much for being with you guys. Well, what's the difference in terms of target customer? We've experienced in both being an asset manager or digital asset manager in Switzerland and providing our technology to other asset managers or banks. We have a couple of bank clients in Switzerland and a tier 1 bank outside Switzerland in Europe. And we also service investors in Switzerland, private investors. I'm pretty sure that our customer base of private investors in Switzerland is much younger than what you would see typically with the bank in Switzerland, private banks. Typically, the average age of your customer portfolio would be maybe 65 years or so with a private bank, and that is much younger in our case, distributed around, I would say, 35 years or so. But still, we have clients from 18 to 90 years. There's also another difference. We can serve clients because of the benefits of technology, irrespective of portfolio size. So we can make a profit with someone who invests a couple of thousand Swiss francs with us. Doesn't matter whether it's a small number or a big number. So the target group can be mass affluent and high net worth individuals. I think these are major differences. And then also, our clients, they highly value transparency and they are cost sensitive, which actually we like. And maybe related to what Jonathan said, they like personalized products and services. And it has to be in line with their value. I fully agree on this with Jonathan.
Okay, I think I get sort of the feeling that, maybe the young tech-savvy people, prefer the technology solutions, and probably the old-fashioned wealth tech providers need to sort of adjust or partner with wealth tech. Maybe the next question, Deepan, is for you. Listening to this sort of personalized wealth tech, the question too, can technology be leveraged to personalize wealth management products? How will this work?
Hi, first of all, thanks to QDB and QFTH for inviting us for this. It's good to be here with all the esteemed panelists. On the question of whether technology can be leveraged on, I guess definitely it can. Just thinking about it, technology basically can help personalization in a couple of ways. Firstly, you can lower the production costs. For example, if you want to create a very personalized portfolio, this is a matter of basically changing parameters in the portfolio optimizer. So the production cost, this can be sort of cut down by running an optimization, by personalizing what you provide to the portfolio optimizer. Secondly, I think in terms of increasing the efficiency of relationship managers, or how a relationship manager would approach their client and deliver wealth management products, technology can be leveraged upon to empower these relationship managers to provide more personalized products. So, like what was mentioned before, so some previously unprofitable mandates, for example, could then be made more profitable. And of course, thirdly, I don't think we can escape without talking about Robo Advisory here. So technology itself can really democratize the whole idea of personalization through a robo advisor. So in our case, in Chameleon's case, we have our portfolio optimizer, which we can put on a platform. We can link it through with a broker for straight through order processing. And also we have a data intelligence module that can actually help optimize outreach campaigns, marketing campaigns. So I guess all in all, definitely technology is a great tool to help this hyper personalization.
Okay, thank you. So what I hear, I'm sure you've talked to banks many times, is a sort of, these are the benefits for a bank to work with your technology, because it can help the salespeople or the relationship managers to give better advice, or maybe to tie in the customer. But so far, with all due respect, that's nothing new. That's more efficiency driven, is it? And yes, all the data are there, so there will be a better advice. So if I go a step further, and I'll come back to you on ESG specifically, because that becomes I think, a very important point. But now I would like to go to Andrea. So many wealth tech companies pop up, and there's an interest in it, and people would like to partner with WealthTech. So how to choose? How should an investment company choose a WealthTech company? It becomes complex. So what is your view? On one hand, you run a fund, and on the other hand, asset managers are your customer. Can you please give your view?
Certainly, Hank. Thank you so much for the invitation. It's a great pleasure to be today here along with honored guests and panelists. You are absolutely right, Hank. What we have seen is an explosion of WealthTech managers. Based on our data intelligence, we believe there are around 1,315 companies today globally that are defined within the WealthTech category. These companies have attracted more than $39 billion of funding, with 2014 and 2015 being the highest years in terms of investment velocity. What we've seen are around 4 to 5 key categories based on investment data, which are basically defined within the software providers for WealthTech, exchanges and trading platforms, as well as quant, robo, and investment advisors, followed by neobanks. The latter being the most predominant WealthTech category, which contributes to around 53% of overall funding attraction. From our side, we see US and East Asia as one of the best markets for WealthTech. And of course, those are related to the high income per capita, the number of high net worth individuals that are demanding personalized digital solutions. From our perspective, as an investor using machine learning and algorithms, we believe that big data and a crowded space, it's a great space to be. Mainly due to the fact that our algorithm can be improved, we are able to generate better statistics, better binary outputs, and say with certainty and granularity which ones are the companies that are within the third quartile or maybe 10% of the best wealthy companies worldwide. And the Millennial AI LLC is a recently regulated fintech company within Qatar Financial Center and aims at providing data intelligence, algorithm, and quant models to be able to improve investment decisions through team-based investment, as well as develop an individual company scoring. Today, we are in the final stages of actually automating the valuation prediction on a big data set, which will enable us to be quite accurate in terms of the individual company score. And when we utilize such a tool, our view is it's very different from the perspective of a bank or a traditional asset manager, mainly due to the fact that we use various criteria to identify the themes as well. These criteria can include investor to investor ratios, investment to investor ratio, velocity, activity, as well as considerations around the funding a company would receive as compared to a peer group. And lastly, I would like to share our top 3 predictions that we believe could be great partners within the WealthTech category. Those include, in our view, neobanks, especially looking at providing solutions towards automation, mainly embedded within the customer bank accounts. One of such companies we recommended previously using our Millennial AI algorithm was a company called Envel, which uses artificial intelligence to automate and rethink the traditional way of the bank account model with debit and credit and transform into an investment account. The second key trend we are bullish on are the Robo Advisor, especially the services, the software as a service, and the companies that provide today investors with access to the alternative asset classes such as crypto, private equity, venture capital, real estate, especially predominantly in US. And lastly, probably a more biased perspective due to the fact that we are a young team at Global Millennial Capital, we truly believe in the social investing platforms. And those platforms basically provide the Gen Zs, the millennials, the very young demographic that wants to invest from as little as $5, a fully owned portfolio that they can choose, select, hold their assets based on their social preferences. And I would say that would summarize our perspective on what partners to choose and what we see in the global data for WealthTech companies.
Thank you very much. Very exciting to hear this sort of investor view saying, you know, this is a whole segment that is growing. So basically you indicate that the WealthTech sector is a promising one, but you also create a sort of view that, you know, there will be competition for the traditional wealth management companies and asset managers, because there will be neobanks, you know, who could get a lot of attraction. So definitely should invest in neobanks. That is your message. Maybe you can sell this to other banks, this idea. Very interesting. Just looking at the trends, Somil, I would like to move on to you for the next question. You know, you are, for me, you are like a trend watcher. So sort of what impact will WealthTech have on the competitive landscape, what we just saw with the neobank, for instance, and the market structure? How will the regulators react to all of this?
Thank you, Henk, and thanks very much to the Qatar Fintech Hub for inviting me for this panel. It's already been great input from everyone who has spoken before me. I think in terms of, you know, talking about trends, to me, you know, I almost sort of compare WealthTech to, you know, let's say haute couture or high-end clothing. You know, first time ever I got my suit was my grandfather took me to a tailor, and it was a 3-week experience from choosing the fabric to getting the suit and the trial. Whereas today, when somebody who's 20 years old, like I was at that time, wants to get new clothing, they'll probably use an app and actually rent something. You know, that's the change within one generation. So first thing which I would say is in terms of the market structure, I almost feel that the wealth management market structure is changing. Historically, wealth management was about preservation of wealth so that it can be transferred from generation to generation and fulfill long-term goals of a family or a community or an individual. But I think, you know, in the modern age, there are other goals in addition to preservation or in parallel to preservation, which are becoming important. So as an example, hyper growth. So a lot of people, especially the younger people, they do not just want preservation, but they also want hyper growth opportunity, perhaps together with alternative assets, as Andrea mentioned. There is a huge focus on values. So you know, ESG and other types of values have already been mentioned, and people want to use their wealth, small or large, to express their values, really. And that sort of then takes the form of social investing and what have you. Also, sitting in Europe, I see a lot of a lot of a trend towards using the wealth and using investment to express certain priorities of personal life. So for example, where do I want to live 20 years from now, and how do I use my wealth, for example, maybe to acquire a real estate portfolio in Southern Europe, and the things like that, and how do I blend that with my wealth management goals. So in addition to preservation, goals like hypergrowth, values, sort of personal life choices, all of these are becoming more and more important in the theme of wealth management. And then that sort of brings me to the regulatory question that you asked, Hank, because I mean this is really a big challenge, because suddenly the regulator does not just have to manage the regulations around the client onboarding and investment strategy formulation and advice and execution, but also around social investment. How do two people get together and sort of share some tips and ideas and invest together? This is, in a classic public market sense, this is an extremely difficult thing, but it's becoming more and more common in the modern world using social media and other types of wealth management applications. So that's one. This is really an unknown factor for a lot of regulations around the world. Second, I would say super services. So the kind of thing that's happened, for example, in WeChat, or Revolut is trying to do it among neobanks in the UK and many other players. How to create mega applications which provide not just financial services, but a lot of other value to users. How does a regulator regulate that? Because then a lot of activity that's being offered is kind of outside the purview of classic financial regulation. Third, around alternative assets. So I think Andrea mentioned crypto, but private equity, venture capital, real estate, a lot of these things are not really comfortable. Regulators are not necessarily comfortable. And then I think the most important point in this, and I think Abdulaziz mentioned this right in the beginning, was around the importance of transparency. Historically, financial markets were driven by trust. A regulator gives a license, and then other people trust that license, and they follow that. But today, there's a thirst for knowledge, thirst for information, and therefore people want transparency. So again, how does the information flow? How can that be regulated? How can requirements be placed on players to ensure that they're giving the right kind of transparency to their users, to their clients? So those are the major things. In all of these, changing an existing business portfolio in a bank is very, very hard, but a wealth management service, or a WealthTech service, I should say, a WealthTech solution can actually do a lot of these things much better, and that can be a great way for a win-win partnership.
Thank you very much. Very interesting, and you touched upon probably the challenges for the regulator. Maybe a next topic could be RegTech, because I think the regulator should change as well. If the world changes so quickly in technology, and you cannot control everything. You should maybe let some things go, but obviously make sure that the investors are protected with certain guidelines that the industry follows themselves. But that is a different topic. Very interesting. So I basically I would like to move over to Ajay Kumar, head of asset management of the largest and best rated bank in Qatar, Qatar National Bank, also very advanced in technology. So you are an asset manager. So Ajay, what do you think of this? Will you, maybe not for your bank, but do you think banks will partner with WealthTech company? And what do you think are the most interesting components of that? And anyway, do you see opportunities in this?
Thank you, Hank. I generally credit you with a great degree of subtlety in the way you put things across. But this time around, you've made sure there are 4 wealth tech guys and just 1 banker. I think you're sending me a message that we're living on borrowed time. So I can take a hint. So I endorse most of what was discussed in terms of the value that WealthTech has created. I don't dispute any of those, actually. In terms of efficiency, in terms of democratization, in terms of access that it is given to various participants that are there. That's very true, no doubt. The importance of that to the bank is that, especially in a scenario when you had consistent drop in interest rates, and one of the primary drivers of margins for wealth managers or private banks is the lending that it does for its investment products. And when you have NIMs that keep consistently coming down, you're pressured for margins. And when you're pressured for margins, your ROE is very low and you're not able to have enough money to invest. So fintech or wealth tech becomes extremely important because you need to bring your marginal cost of delivery down quite considerably. So that is a big value add. So when you look at the various parts of the wealth tech components of what an asset manager does and where wealth tech can add value, and areas that I believe that is still probably undernourished. In terms of the entire value chain, whether it's client acquisition, retention, investment strategies, asset allocation, modeling, risk management, transaction management, and operations, when you just bring this entire thing together, investment strategies and asset allocation is fairly well taken care of already. There's a lot of standardization in terms of the models that are available for investors, and the smaller and the medium scale players use standardized products used by WealthTech. The larger guys would develop their own investment strategies and models that are there. Risk management, again, whether it's investment risk, credit risk, market risk, you name the risk, it's already very well catered to. So there is enough models that are available and systems that are available. Transaction management is very commoditized, extremely cheap, and again, it's been there for very long. It's just integrating these things together that WealthTech can help. But where we do see a gap, which I think is important, is in terms of client acquisition and retention, and more so on client retention, because it's expensive to retain a client, especially when you have large number, not necessarily on the ultra high net worth, but when you go a bit lower on the affluent class. You know, investing is still an emotional experience. One would like to say that it's very scientific by nature, but it's an emotional experience for the investor. When you see your investments, when you see investment losses in your reports or elsewhere, there is a feeling of distress, and then you are generally inclined to do a transaction which is not necessarily in your best interest. So when you don't have an interface at that point in time, or you have just a report that you receive electronically, you just go into the platform and then sell the investment. Now, we were faced with this conundrum, and then we tried to apply some relationship management just to check out how the investors would react. And you wouldn't believe when they had a human interaction and discussion with individuals, we could see the retention rate going up about 90%. And that is huge. And it's very important for wealth manager because it's material by nature. Because client acquisition is expensive. So you really want to retain your clients. So how do we convert the robotic experience into more a human experience? You know, when you're distressed, you really don't want to speak to somebody who's going to speak to you very logically. It's an emotional problem, and then you want to have an emotional solution to it. So you want the human interface there to be able to comfort the investor and make him believe that you share the same degree of distress that he does, and therefore he builds a trust in you. So that is one area that we see that still is a gap, and I don't know how WealthTech is going to fill the gap unless you convert or make robos more human. We were very successful in converting humans into robos in the past, and I hope we are able to do the other way around. So that can help on this.
Yeah.
In terms.
Yeah, sorry, go ahead.
Sorry, please go.
No,
Yes,
yeah, thank you very much, because you bring in, after all the other panelists say something, it's data, it's efficiency, it's new markets, new technology. You bring in the traditional element of what basically Sunil called also trust. There's certain trusted institutions, which are the banks, and then the element of emotion and human interaction to help with certain wealth decisions. It's great to have a robo advisory, but then at the end call a human to make a sensible decision. That is an interesting element, and I think that's probably the best sales argument for the wealth, the traditional wealth managers. So let's move on, because I have two questions for all of you. So again, Felix, I'll take that sequence. So what this dilemma, sort of not dilemma, this basically opportunity of human and technology, what have you learned from your experience in working with wealth partners and technology?
If I may try, just add to the last point regarding retention, I think that's a very important point. I think what helps is transparency to build trust, and then be prepared when capital markets are not, performing nicely. That has been our experience. Just telling clients the truth, telling clients it's a risk premium you get. So there's some pain on the road to your goal, and if you tell clients clearly about that before you see losses, then they're better prepared and they also trust you more. I think that can be done irrespective of whether you're doing your business digitally or more traditionally. Regarding your question of experience with this interaction with partners where we deliver software, one of the big problems is the complexity you face in terms of the interfaces between different technologies and different market players. Don't underestimate the complexity there. I mean, there's a cost attached to it, but it also means that you have to be careful to still be agile, and be fast there when you have to face, to bring all these different partners together. That's the main experience we had in collaborating with a whole bunch of partners.
Oh, thank you. It's very interesting. You bring in elements as risk, be careful, some pain. It's costly as well. So we were basically back to square one. New technology, and if you really need to implement it, there's also cost and risk, maybe pain, as you say, elements to it before being really successful. So if I move on to, because we saw in Jonathan's presentation that 50% of the people that basically take wealth decisions are millennials. That's why Andrea's company is also called Millennial Funds. But millennials have a different mindset, and different things are important, and especially, as Somme also mentioned, the social element of it, or maybe the ESG component, which becomes more and more important in asset management in general. So Deepan, I know Chameleon is really making this as an important point. So how can technology promote sustainable or ESG investing?
Yeah, so exactly that, Hank. I mean, we are emphasizing sustainability and ESG, and as well as sustainable development goal portfolios, SDG aligned portfolios. That's one of the things that we do, and we do quite strongly. Just touching on Somil's point about hyper growth and values, I think we have seen through a couple of surveys that financial institutions have done, and also what that we have done. What we've noticed is that there's a very big demand for sustainable investments, especially amongst millennials, and at the same time, people who want to invest sustainably don't want to compromise on their returns, so they want that growth element, but at the same time they do also want to align their investments to their values. So the obvious answer to meeting these two demands would be to actually integrate sustainability or ESG into the portfolio construction or portfolio optimization process. So this is where technology, and this is how we sort of do it with technology, which is we utilize technology to democratize the whole optimization process. So we construct these portfolios, and we do the computationally intensive process of portfolio optimization. We do this, and it's something that can be beyond the capability of a lot of retail investors. Secondly, the technology that we utilize also can enable this hyper-personalization as to what Jonathan has mentioned. And thirdly, just coming back to cost, utilizing technology to provide ESG as sustainable solutions, it can help reduce the rollout costs both for institutions as well as for investors to purchase. So we are at Chameleon, we are quite big into the sustainable investing space, and we definitely utilize technology a lot to help provide this. On this note, I'd also like to add and share maybe with the audience that Chameleon has actually been shortlisted for the PRI Awards in 2021. We have a project called Democratizing ESG Investing with an all-in-one digital platform, and we have been shortlisted for this award. So just wanted to share that with everybody.
Thank you very much. Congratulations, by the way. And well, you're part of the Qatar Fintech Hub program, and you're also setting up the QC. So
yep, that's right.
We definitely would like to welcome you in this market. And perhaps that is a bridge to basically to what's happening in this market, you know, GCC, maybe Qatar specifically. And then I'll move to Andrea. You know, you're in Dubai. You've recently set up as a fintech or like a WealthTech provider to financial institutions here in Qatar as well. So do you see any change in the behavior of investors? You know, do they discover these new asset classes? What sort of innovations are happening in that space? And do you see a real interest in the GCC and maybe specifically in Qatar, if you can share that?
Certainly, Hank. Thank you very much. And it's very, very interesting to hear the different perspectives, from the panelists, and they are equally important towards understanding how market structure is transforming today in the traditional financial sectors. We believe at Global Millennial Capital, and mainly due to the fact that we have taken our learnings by investing in Silicon Valley, which still remains #1 innovation hub worldwide, where we still believe we have around 50% of the global unicorns, and we have had an exposure of almost 50% to the fintech sector. WealthTech itself is a predominant part of our investment strategy. And we firmly believe, based on what we see in the US, especially as a result of a more relaxed or more forward-looking regulatory environment as well, is that we live one of the most transformative times in financial center, mainly due to the emergence of DeFi. DeFi, an abbreviation for decentralized or democratized finance, is what we believe the future could look like. And in these markets, which are regulated by technology and by people itself, we've seen that investors and consumers can redeem exponential returns, which are much higher than in the fiat markets. However, this trend that is available globally, especially in USA, has not emerged in the region. And in the region, we still believe that investors tend to follow a more conservative approach in terms of investing, a more Sharia-style investing. And while they are very open to innovations, they tend to prefer to invest in innovations within the more traditional sectors. We see a lot of interest for fintech, health tech, edtech. What we also observe is definitely the emergence of family office investment capabilities, which are currently developed, and the fact that recently in Qatar and in GCC, family offices want direct access or direct relationships with fund managers that can give them access to very unique and global opportunities. And lastly, what I believe personally is that the region is very ripe for WealthTech solution, mainly due to the fact that 40% of the population still is below the age of 30. Those millennials are coming to market and demanding hyper-personalized digital solutions and access to alternative asset classes. The financial literacy is increasing, and these millennials are not trusting the bankers anymore, and they don't want to pay fees. They prefer that interchange fee is the new model. And that, I believe, that will be the next big trend. And we believe there is room for apps like Robinhood, who has become $1 billion company, very, very comparable to the big banks, as well as with emerging players in the region, such as Sarwa, Baraka, or even Smart Crowd, that provide investors access to real estate or alternative or crypto with as little as 500 Qatari riyal. And of course, that is from our perspective, probably because we tend to take an external perspective to a big bank. Those are the trends that we see emerging, and we see significant capital backing these ideas in terms of evolving in the next generation and targeting the next generation of investors who prefer user experience. And in the top three positions in the bank, we have a head of design that looks after the customer and user experience.
Thank you very much. So very thought-provoking, and basically saying that this region is emerging. There is a lot of interest. The fact that family offices, indeed, which are probably traditional bastions of investment, are opening up to these asset classes. Very interesting, and the young population will also help. But you challenge the bankers, obviously. I'm with Ajay. We always think that the bankers are necessary for this human component. So Ajay, I wanted to leave you to the end, but I see that you are moving, and so do you see basically a future where there could be wealth handling without a human component? So what is the threat of the wealth tech to the traditional model?
Sure. And before I answer that, I just wanted to reply to Andrea, who said millennials have lost trust in the banks. How would you come up with that? We have a number of millennials accounts and who operate with the bank, and I don't think they've lost trust in the bank. Where the banks are faulty is, I agree with you in terms of the degree of transparency that they seek and the speed of service, and I think where WealthTech is ahead of the banks. But in terms of trust, I think the banks hold as much, or in fact more trust among millennials or the others than anybody else. I mean, you talk of Robinhood and everybody else. It is not free trade. The only thing is that there is a cost to it. It's only that it is not apparent and clear to the user what those costs are. There are embedded costs into that. Sorry, Hank, so I had to just deviate a bit. Coming back to you in terms of do you see a complete human devoid interaction? Well, if you can have a robo that exactly replicates a human experience, then why not? So never is a very strong word, so I can't say never. But if robos can generate an experience to individuals which exactly replicates a human experience, then of course, why not? Then people don't feel the difference between interacting with a robo and a human. But in terms of the risks, what I see is we need to bear in mind that we've had the longest bull run in the history of capital markets around the world. And that distorts many things, whether it is, there was a panelist who said in terms of the wealth creation, wealth transfer, the number of wealth managers that are coming in, is all on the back of the largest and the longest period of wealth creation in history. And that could change, and could change pretty quickly. And one thing that we also need to consider is the wealth management platforms or Robo Advisory creates a degree of standardization, and that's important because you need to scale up, and that's what brings in the cost efficiencies. But the problem with standardization eventually is that it builds up a lot of systemic risk in the market. And when the market turns, this can be really, really hazardous to the capital market. So we need to be very careful that when a lot of investors, and you democratize is great, but that does not reduce systemic risk. It compounds it. So more and more people and largely standardized investments, the markets become very unidirectional. And when you turn around to a bear market from such a long bull market, you could have a huge systemic risk in your hands.
Thank you very much. Very powerful addressed also the opportunities, but also the risks as well. So I would like to have my last question to Samuel, basically as a trend watcher. So this dilemma that we see right now between the trading technology like Robinhood and the traditional wealth tech like Stash and Nutmeg. So what will happen? What will happen? Maybe you can provide a short answer, and then for all of you, I would like to ask you in 20 seconds to think of the future, and maybe Samuel also, and how will in 10 years' time the wealth management sector look like?
I think, Henk, the point that's made by Ajay is absolutely spot on. The big challenge with new technologies is the big challenge is gamification and so on with Robinhood and other similar platforms, is that is about lack of knowledge. So there is a lot of data, but there is not enough knowledge, and I do think in that sense more education and perhaps the whole social aspect can play a very strong role, because that education is definitely not coming from the traditional financial sector in a way that is consumable by the modern sort of consumer. Therefore, a combination of some kind of financial education, wealth technology platforms, and the social media aspect of wealth technology, that can possibly play a role to sort of balance this point of view. And looking at 10 years hence, I mean, I do expect, it's an absolute probability, if not a certainty, but high probability that there would be some kind of a dip in the market, because things can't just keep going in one direction always. But hopefully in a 10-year kind of time frame, we'd be sort of coming out of that with a much stronger financial wealth management and wealth tech sector. So I think over a 10-year time horizon, I'm always bullish about a lot of new trends. Yeah.
Okay, thank you very much. And over to the others, Deepan, what do you think? How will the world look in 10 years from now?
So I think I'm going to take a middle ground between Mr. Ajay and Andrea and say that I think the future itself would be a space where fully digital robo advisors and sort of hybrid robo human advisors would live together. Ideally, I think the idea is to meet the demand for wealth management that is going to grow definitely, and also address this transfer of wealth to millennials that I think a couple of the panelists have mentioned as well. In this sense, I think what is going to be key is how to actually address this demand for hyper-personalization, for ESG investing, for more sustainable products, and also how to marry the need for wealth products to meet investors' values, and at the same time to provide that growth element as well.
I'll cut you off there because it's more than 20 seconds, but it's sort of middle ground. Andrea, is there a future for humans in your view?
No, I think it's absolutely fair to learn from everyone on the call and understand perspectives. From our view as investors in the future trends as our core objective, and provision of that access to new trends to investors. We do believe certainly that fintech is here to stay and will emerge in terms of additional services, products, and solutions demanded by the consumer. So from our perspective, we have a consumer-centric focus. And then we see already in other developed countries that banking as a service model is evolving. And that creates a new market structure from the traditional bank into neobank, as well as the relationship with the WealthTech manager. We also believe that robotic process automation will certainly rethink the organization structure within more traditional institutions. And we believe that it will take time for a fully automated robotic process, especially in large banks. However, we believe that the emergence of fintech, the customer acquisition, and the switch of customers who currently have accounts in the banks to lower fees, better user experience fintech will trigger a reaction from the big banks in the future, but depends on the environment, on the demographics, on the regulatory. That might take years, or it can happen as well very fast. That would be.
I'm cutting you off there, but yeah. So room for neobanks, customer centric. Is that what basically customer centric? I think is key in your vision. So basically, Felix, you're the last with a 30-second view on the future.
Well, technology is progressing so quickly, and digital wealth management will become better and better. So it's going to be difficult for human beings to catch up there. I think digital wealth management will become the standard, but for those clients who want to pay for the human element, it will be an add-on.
Okay, that's an interesting thought. Maybe we'll conclude there, and I'll hand over to. I thought this is a very interesting discussion. I hope to meet you all in person, maybe when we all can travel, and then do this again with the real audience. That would be fantastic. I'll hand over now to Hassan and to see if there are any questions from the audience to address to the panel.
Perfect. Thank you so much, Hank and the panelists. It was an amazing conversation. I think there are quite a few trends and discussion points which we came across. Yes, Hank, we have received quite a few questions, but unfortunately we are out of time. However, there is one question which I would really like to post and I would like to hear you. Are the big techs, GAFA, usually Google, Amazon, Facebook, going to target this space next once they are done with capturing the payment space? If anyone would like to comment on that, and then
maybe Somil, you know, can you give a view on this?
No, it's very, very hard to say about what will a particular company do next. But I think it is far from certain that that good ideas will come from big tech for a long period of time. The average age in which a large company remains large is also becoming shorter and shorter. So a 10-year view, I would say probably not.
Brilliant.
Anyone else a view on the threat of the big techs in this space?
I would just add that they already have a big cut in the process when it comes to customer acquisition. So maybe there is I'm not so sure about the motivation.
Okay. So my personal view on this is that ultimately we've seen this in the past. If conglomerates becomes too powerful, regulators will step in and cut them into pieces, and then it all starts all over again. So I think the regulatory component will be very interesting for the next session, Hassan. But if there are any questions, I think probably we can lead those to individual panelists.
Yeah, so Hank, with that, I will now like to close the webinar. As I mentioned, we have questions which we will send out to you guys, to the panelists, and then obviously we'll go back to the people who requested. Thank you once again for everyone for their time, participation. I think this is very valuable. This will be shared with the universities and other stakeholders, so definitely they will be getting in touch over time, and we are going to promote this on the social media channels as well. So once again, thank you from Qatar Fintech Hub to all the panelists from QFC, Invest Suite, and the panelists. And we will hopefully see you guys soon. Thank you, everyone.
Yeah, thanks all.
Thank you.
Thank you.
Thank you.
Thank you. Bye-bye.